Good evening, everyone. It is Sunday, August 18th, and it's your boy, the Trade Daddy. We're going to go ahead and walk through our watch list for this week. First things first, I'm going to start off with an apology. I've been slacking the past few weeks, and one thing that I stress to people that colleagues, people that are asking about trading this, that, and other thing, or just, you know, generally in life, consistency is key, and I've got to get consistent with putting these watch lists out. So I do apologize, but these will be more consistent. Just had things going on in life that took precedence, but there's no excuse. Moving forward, be pumping these out every week. Like I said, first things first, we're going to walk into the economic calendar for this week. I use Forex Factory since I do trade some Forex too. The big pending thing tomorrow is going to be Waller speaking. For the Canadian dollar, you got CPI dropping Tuesday morning at 8:30. Wednesday, we got the Fed minutes, but Powell's not speaking. But what you got to watch out for is the event that comes up called Jackson Hole, and then he's going to be speaking there, and that's on Friday. In between that, you've got the Euro. It's got some pretty pressing stuff. The PMI, and what's also crazy too is you got the French, German. It's kind of the Euro covers vast majority of small little countries. The British pound, you're going to have PMI on that as well. Something that's been moving the market recently has been unemployment claims, and that is because this data is dependent on whether or not we get rate cuts. So watch that as a market mover. I think PMI might be a little bit of a market mover as well, but I think that the big catalyst here is going to be unemployment claims. Unemployment claims. I feel like I'm saying that weird. Anyways, the Fed minutes is probably going to be a bigger one. I think that we already know what the Fed minutes are going to say, unless they say, unless there's a surprise that comes in. I don't think that's going to be a huge market mover. And then you've got, for the Canadian dollar, you got core retail sales. So I think we've hit all this. Bailey speaking for a catalyst for the British pound. It could be a mover. It's kind of like a Powell speaker type movement. So just got to wait and see. Let's go ahead and get into it. After the Q's dumped from its all-time highs a little bit over 500, it was expected. What you see here is that, it looks like it's breaking a trend line. It's breaking that downward momentum. And it did that at the green dotted line right here, the 200-day moving average. You see the RSIs, picking back up towards a bullish sentiment. The MACD is lagging a little bit, and this is our new indicator down here. It's called the trend indicator, and that has lit up green after we crossed over the 50-day moving average. Now, here's what I do like about QQQ. I like the bullish narrative regardless. We got the partial gap fill there. This could be a rejection to fill this gap down below. If it goes below the 50-day moving average at 465, let's call it, I'll look at the bearish narrative. As long as it maintains that 50-day moving average, I'm looking for it not to go to all-time highs, but to fill these gaps. So watch it, play it accordingly, look for your setups, okay? And you got SPY. Same thing pretty much. We filled this gap over here. We could probably get rid of that one, huh? That gap's been filled. Got this gap fill right here. Same thing as QQQ, except it's a little more extended over the 50-day moving average. Same thing, the indicators are still moving in a bullish narrative. We've got one last gap to fill up here near the all-time highs at 561 area, 560. So, we could look for this point of resistance to break right here at 555 and look for that gap fill there. Or you could look for the retracement to the gap fill and then watch for it to move below the 50-day moving average to take that one short. The other thing to note here is that the 9 and the 21-day moving average are crossing, so that's another bullish sign. Going to the Russell 2000, IWM. This name has been hot lately. I thought it was a full rotation. I mean, we ran from 200 all the way up to 228, okay? Now, this is pulled back. We are in the middle of a gap fill right here. It hasn't completely filled it. Still got a little bit of room topside. I think this is going to end up falling off. With rate cuts coming, I think that the small cap stuff might fall off a little bit. The trend is still showing bearish. Got the RSI trying to poke its head up there. The MACD is coming down across this zero line. What I would do is I would play this under 210, 209, and play it down to 200 again. If we don't get that and we get the topside fill, there's really not enough risk reward for me to take anything topside for right now, just because this consolidation area. I would like to see it kind of break past that and move up in, but it's still not just a high probability trade for me. So I'm leaning more towards the bearish side on this one. All right. So now let's go ahead and break it down into my stocks over here. First one up on my list is going to be Apple. Apple's been on a rip. You see, it's got like 10 green days in a row, pretty much. I'm not counting those. I'm just kind of ballparking here. Uh, it filled a gap and continues up. It recovered the 50-day moving average. I would honestly play this long over 227, 228 area and look for it to fill this little mini gap up there and then to go contest the all-time highs. I don't see any reason for this to slow down. The trend indicator is green. MACD's curling. RSI is moving back up. Okay. Another one that I could play both ways. It's another household name, Amazon. Amazon took a recent dump after earnings, right? Pierced the 200-day moving average, which is that green dotted line. And what you got is it started to move into this gap area that it created right here. This is the setup I'm going to play on Amazon, okay? I'm not going to touch it moving up into the gap area. If you want to get risky, you could play it over 178.50. If not, I'm going to wait until 180. I'm going to take it long over that, and I'm going to look for it to run up at least to 190. Now, the bearish narrative here, the 9-day has not crossed the 21. I would play it to, backfill this gap here under about 174.50, 174, and play for it to gap fill down to about 172.50. Okay? So trend indicator's green. Everything's pushing towards the bullish narrative. I would just play this safe, risk reward. That's what this game's all about. Another one that's not my favorite. It's kind of on my side watch list, but I'm going to go ahead and pull it out first since it's here alphabetically. Boeing. This recent kind of a bear flag breakdown. It's coming up to retest. If this does not reclaim 184, 185 area, and it rejects off of this, we can look to take this short. Not much more going into that. That's the whole thought process behind it. Next is FedEx. FedEx has this huge gap area after earnings. We are in the gap area. It's pierced right through. We're using it as kind of a resistance area now. I'm looking to take this short, continued under 274. Now, going on to the next one, got Google. Here's what I like about Google. I've had some recent news catalyst that is causing this to continue down while the market recovers. We got some consolidation right over the 200-day moving average. The trend down below with the trend indicator that we got still shows that it is bearish. MACD across the zero line. You got a little bit of divergence here on the RSI, but I don't put too much faith into that when it's sitting here holding on for life. So it did fill this gap, okay, at that gap area that it filled. Now it's just consolidating. If this breaks below 157, I'm looking to take it short. There's nothing that entices me to take this long here, okay? Goldman Sachs and JP Morgan kind of had the same setup. Big sell-off right here. Reclaim the 50-day moving average, moving back up to test all-time highs. Long over 218. I'm going to go ahead and jump to JP Morgan now just so we can go ahead and look at that. Like I said, same setup. Breakdown, recovery move, testing all-time highs. Basic, and the trend indicator is green. The RSI is pointing back up. If this breaks over the all-time highs, we're just looking for a run in that direction. Okay. Now, next on my list is going to be McDonald's. All right, everyone's favorite fast food chain to eat. Right, one of them at least. The golden arches. We got this golden trend line coming down off of these points right here. You could kind of draw the immediate trend line coming down. It broke it earlier. Whatever. Potato. I like to go on the more certainty side of things. Now, with this, it recovered the 200-day moving average. We got the break over, and we're moving back up, and it broke over this recent breakout move right there. Anything over about, let's just call it 280, look to take that long on McDonald's. There's no short move here, okay? Let's go ahead and get into NVIDIA. NVIDIA had a recovery bounce off the 200-day moving average. We got the MACD curling, RSI is coming up, and trend indicators green. If this continues to post higher highs from this point, look to take this name long. Kind of the same basis for Microsoft. The only difference is that we have not recovered the 50-day moving average. I would look for this 50-day moving average to recover and hold as support. And then I would look to take this long. Will it test all-time highs? Who knows? Play it smart, play it safe, okay? That's always the way that we look at it. A name that a lot of people thought had fallen off, and then they just changed CEOs. This thing started to fill the gap, got rejected, and then it gapped up over the gap, okay? They just got a new CEO. I believe it is the Chipotle CEO, or ex-CEO, I should say. What this is looking like here, I mean, I don't even know if you call this really like a pennant pattern. I guess you can kind of shape it up as one, but I'm looking for this to, continue topside, or we can look for it to gap fill under $90 basically. And the gap fill will come down to at least 85 bucks. It should come back down to 78, but I'm not that hopeful, especially with the news catalyst. I'm looking to take this long. The better risk reward here is going long at $96. Okay. So that's all I got for the main watch list. On my side watch list, things that we're just taking into consideration here, more longer plays. I'm swinging some options into this gap fill after earnings. Intel fell. I don't think that it's that serious. I think this was a knee-jerk move based on some bad guidance and bad outlook or whatever. So I played the $22 and $23 calls, I believe, in Discord, and I got those 45 to 60 days out. Just keep stacking those as long as this price stays stagnant right there. Another name that is on the my kind of watch list. I know this is a watch list, but these are just kind of my side watches. Is AMD. AMD, you got the 50 crossing the 200-day moving average. This is what they call the death cross. But what could happen is that we could recover right here, 150, 151, and could move back up. Basing that we have, lower highs and lower lows, I think that we get the rejection right here and we continue back down. That's just me. Trend indicators saying it's green. Indicators are only as good as the person using them. I'm not holding any weight to that. And last but not least, actually, I got two more for you. I got two more. I'm going to show you this one. Meta. Meta had a recovery move as well. Lower lows into the same static point of resistance. Play it over 554 or 544. I'm sorry. Long over 544. Other than that, not touching it. Last one. This one's the last one, okay? We're going to go ahead and go with Nike. Nike's in the gap, all right? We got the gap from $79 all the way up to $93. If this continues to post higher highs, over 83, take it long. Plain and simple. Just be careful. We got earnings coming up on, what day is that? I think that's like September 24th. So not too close. You could probably play some 30 days expiration options. Pick up some volatility towards earnings. Guys, appreciate you. This is my watch list for the week. Stay tuned. I'm going to start posting separate watch lists for Forex and futures, and that'll be coming up shortly. Maybe not this week, but definitely next week. So let me know what you think. Comment below, and don't forget to follow along for more. Talk to you soon.